and then we can go from there. So you said you're just the setup overall, the trial balance setup is your,
Yeah, my
where we
trial
can
balance
start?
just matched what they gave us. Do you want me
All
to?
right. Yeah, let's have you pull up what you have. And I should be able to pull up your account as well on my screen. But let's have you pull it up and then I'll just follow
Want me to
you.
screen share
Yes, please.
it? Okay. Okay. You see that?
Yes, I can see it.
Okay. Go to my reports.
Rose, I can't remember. Did you email me asking about access? Were you? No,
No.
that's someone else. That was Ronita. Never mind. Rose.
I go by Rose is my middle name, so all my assignments are Shannon. That's probably why you're confused.
Got it. You said all your assignments are what?
Shannon.
Shannon. All right. That helps. That helps me pull up your account or your QuickBooks account so I can follow along. All right. So we have your trial balance. We are showing custom date, prior year, 2021. Perfect.
All right. So my question is, let's see. Yep, it's still the same. I have a sales balance in my
Yes. That is fine, to be honest with you. It's a little bit different because I'm assuming you set up, let me see, you set up an invoice for that 2,200?
No, I just set it up as their opening balance. Or let's see. When I created their customer account, it had a December 15th balance is the way I set it. Because I don't have invoice details.
Right, which is fine and perfect, and that's fine. I think when you set up the beginning balance, it does it automatically and puts it somewhere. And I'm assuming that you set up your products and services before you set up this beginning balance.
Probably.
And when you do that, it maps it to cells. And starting December or January 1st, if you change your trial balance to January 1st,
puts it in.
it has retained, yeah, it flips it, but has retained earnings and opening balance equity, which is fine as well.
I mean,
it's still,
they shows us zero balance in the opening balance equity. That's okay.
right. That's okay as well.
Retained earnings, the whole balance.
Yeah, and you can journal entry it, but so QuickBooks, whenever you start a new company, it will default and put everything to opening balance equity as the default, unless you choose to put it to retained earnings.
Okay.
So there are ways to fix it, like just do a journal entry. Also, but frankly, I'm not concerned with it, and I
Okay.
wouldn't even worry about it if I was you. Let me see if I could. As I play with it. So this deposit for the bank, I'm assuming, so let me see if I can share my screen. Safari bank deposit. So what I did was just went to your, oh, we've had some more people join, great. I just went to your trial balance and clicked into the line items. And I want all of the transactions. So I'm just going to do a wider search. And then it has this deposit. So you did a deposit, or you did beginning balance, or created this opening balance, and the account went to opening balance equity. And if we want, we can change this to retained earnings.
Okay.
When we do save and close, and we go back to your trial balance, it'll have retained earnings
Oh, gotcha.
as of. But yeah, so if you want to change them to match like 1-to-1, that's fine. I'm not too concerned about it, and I usually review it, especially on the equity portion. A lot of that, I just make sure that it ties.
Gotcha.
And there's going to be some concerns when we get later on down the road, but for this beginning, I understand the situation. And same, the remaining 5360, you can go in here and change all this account balance from opening equity to retained earnings.
Okay.
But for other people watching the video, if they don't want to do that, then it's fine leaving it as it was.
Thank
But
you.
now that you're here, I'm just going to change it for you real quick.
So it matches. So.
Yes. So this is accountant tools, and this is something you guys, to be honest, we're not covering at all in this class, but this is a reclassifying transactions and tool. And it's something that I use as a consultant when I come in and the books are a mess. And I realize that they've been a mess for a really long time. I go into here and start making changes to fix them on a wide scale.
So you can just pull up everything that needs to be changed and mass change.
Yes, well, I should be able to. Oh. Where is it? There's no actual transactions. It's all just
beginning balance.
Beginning balances. So I guess you can't reclassify the transactions, but you still can do like we said and go line by line and change it if you want. That'll be up to you.
Okay.
All right. Let's see here. Stop sharing. So we have a few more people online. Let's go over some other questions. Is that all the questions you had, Rose?
Yeah, that is. Thank you.
Sorry, not Rose.
No, you're
Dang.
right. Shannon Rose. Just I'll answer to whatever.
Okay.
My kids are a little noisy because we've got stuff going on, so they're in the room. So I'm trying to keep it brief. And I know this is a really simple question. All the other assignments for my classes are due on Saturdays, but everything in this class is going to be due on Thursdays. Is that correct? Like based on the calendar?
Yes, and frankly, I didn't set up the calendar. So I've had another individual bring up kind of the timing of the calendar and the strangeness of it. And yes, it's due on Thursdays, and it helps me because I tend to grade my stuff on Fridays and Saturdays. That's when I have time to do it. So yes, try your hardest to get it in on Thursdays.
Oh, no, it's totally fine. I just, for some reason, my brain didn't register. And when I saw the 12 on a Friday, I thought it was midnight on Friday. And so when I woke up at Friday morning and it said it was late, I was like, well, it's done. I just was waiting to see if someone responded to my question. So I got it in, but I just wanted to confirm that because with my work schedule and kids and things, I was just like, I had my calendars all written out, due Friday, due Saturday, and I'm just changing everything to Thursday. And then,
yes.
And then I also had a question on the payroll project. And this is, and again, it's probably a simple question, but when it came to everything else is making sense to me. And I was able to get to your total wages minus the 2 cent variance, and my nickname's 8 cents Eva in the company. So variances drive me nuts, but I will let it slide. So I got everything to net to it, but my struggle that I'm having is with journal entry for the payroll, the employer portion, because my brain wants to be able to say, these are where the numbers come from. And last week I watched a couple YouTube videos and they're like, oh, this number you get from getting the difference. And I just wanted to confirm that that's the correct step to take on how to get the payroll, because the matching, the 401k matching expense is going to be the 50% of whatever, like you come up with that calculation and you link it to the green section above and you link it to row S10, like a column and row, you link it to S10. And workers' comp expense, you link to Y10 because that would be the total. And then the 401k payable would be the full payable, which would be the employee portion and the employer portion, correct?
So no.
No, okay.
Because we have the employee portion and then the employer portion.
See, that's where I got confused last week, and I didn't know you had office hours. So I got that wrong because for some reason I thought when it meant the employer portion, this was the employer paying the tax agency. And when they pay the tax agency, they pay the full amount. So that's where my mind was going on to was, oh, the 401k payable portion is the full amount they're paying to the 401k company, not their portion of it. Yeah, this little journal entry right down here. I was assuming, okay.
Yeah, so in the mindset, we recognize it a little different for wages, right? Because essentially if I'm an employer, I'm gonna have X amount of dollars per hour, and that's gonna be my wage expense. My wages. But then, so when I book my employee portion of payroll, it's essentially this. It's total wage expense. And then
I totally get it now. Like I work in commercial real estate property accounting right now. I just don't have a degree. So once you said that it's only the employer portion, it clicked with me. I just wasn't sure because with pushing so much, not pushing, but learning so much, oh, the employer pays both. My brain was on employer has to document both. But from what you're saying, by documenting on the employee and documenting on the employer, you are tracking it. You're just tracking them separately and together. When they hit the GL, you're going to see the employee portion hit the GL and you're going to see the employer portion hit the GL. So there'll be two separate journal entries tracking it. So when the payable goes through, it's not one payable. You can clearly see both sides. So that's making more sense now. So definitely got that wrong last week. But, okay, so that was my only question on this, because QuickBooks is making sense to me, but,
Yeah, and I know, and I'll probably mention this in next week's announcement as we actually make the journal entries in QuickBooks, but it lists the employer portion, and the employee portion, it has wrong accounts, and I'll address it next week as well in my announcement, but I know the documents are wrong. And just for anyone else that's on the call, the employee portion is essentially all the wage expense. And then this is what the employer is responsible to pay. So the dollar amount, the net amount, and then the taxes, the 401k, the Medicare, everything that's coming out of the employee's check. And then the employer also has additional expenses on top of these expenses, and that's what this journal is. So we're doing the 401k matching expense, which is additional expense above what is coming out of the employee's check. Payroll tax expense, so additional expense that is on top of what comes out of the employee's check, and then workers' comp expense. So these are debits hitting the expense, and then these payables are hitting the payable. So as it accumulates on the balance sheet, we then use that total amount to pay out to the different organizations or the different governmental departments. The state, the federal wages goes a direct deposit into employees, 401k payable, we're funding 401k with both the 665 and the 332, and Medicare and Social Security tax payable. So yes, great question. Thank you. Other questions? Does Charlene or Magda or Vanessa have any questions that you want to bring up?
I have too many, so I think they better go first.
All right. We'll ask Charlene or Magna if you guys have any questions, and then if not, we'll cover all of Vanessa's questions.
I'm gonna jump off because I've got kids going nuts with dinner, but I wanted to say thank you very much.
Perfect. Yes, that works just fine. Maybe Vanessa, maybe we can just go to your questions, and hopefully it
Okay.
covers everyone else's questions too.
Yeah, well, like I said, I have a lot of questions on the payroll.
Okay.
I'm very confused with how to calculate the salaries and the dates. And yeah, I'm totally lost on that. I'm not sure. Yeah, I'm not sure of anything really. And I know if I don't get that part right, then the rest is just going to fall apart because it's based on the wages. So yeah, if you could just help me with that, then I kind of figure out the rest.
Let's see. I don't know if I have. Oh yeah, I do actually. So I have a key, but I also have a blank form for the payroll projects. Remind me, for the payroll project, is it just a spreadsheet or is there a PDF that goes along with it?
There is,
that
yeah, there's
has-
another document that goes with it.
All right, let me open that up too, so I know exactly what I'm looking at. Module. And I've had a few people ask me this question, so I'm glad you brought it up. So we
It's just like,
have
it's very
payroll.
confusing. I don't know if I have to divide by the 52 weeks, if I count how many weeks they work on that year, or if I have to divide by the period, which is 24, because they pay bi-weekly. So it's like, I have no idea which one I should use.
Got it. So let's see, I'm just going to share this initial document. Which one is it on my screen? It's this one. So I'm going to show you the formulas that I have. So we have a year total,
Yeah.
and in the Word doc, it says that it's paid twice monthly, right?
Yeah.
Big Cat Construction pays its employees twice a month. First payroll period each month is 1st to the 15th and is paid on the first business day following the 15th each month. The second payroll period is the 16th to the end of the month. So twice monthly, which is paid on the first business day of the following the last day of the month. Okay. So for wages of the current month, we take the year total,
Yeah.
which we're given in the Word doc, gives you annual pay rate salary per hour,
Okay.
or rate salary or hourly. And we have 180 for Ron, we have 84 for Mary, we have an hourly rate for Bill, we have a salary rate for John, which is 70,000. We have Jill, which is 48,000, and then we have Jane, which is $38 per hour. And essentially what we did, wages up to current period, because the earnings is the last period in the year. So the last payroll. So my calculation is the total in a year divided by 24, times it by 23, and that gives you the wages up to the current period.
Okay.
And then
So
the last,
sorry, just for me to be sure. So the 25, because they are paid bi-weekly, twice a month. And then
Yep.
23, it's the time they have work on that year. Is that
yeah,
correct?
yep. So for Ron, he's been here the entire year, assuming it's, are we 2021, right?
Yeah.
Based on 2021, December 31st, right here. Yeah, this is assuming we're still in 2021, which is fine. And that's what these numbers are too. That it's just 2021. So we're a little outdated with our material, but assume that we're working in the year 2021. So we have the full amount of the 180 divided by 24, which is each pay period. And then we've paid them out 23 periods, and we only have this last period to pay them out, which is the period we're working on.
Okay.
Same with Mary. Her salary is 84,000, the same formula. And then earnings per pay period is the total divided by 24. Now, Bill, I'm assuming all employees are over the age of 21. Bill worked one 40-hour week prior to December 16th. So this was his hourly rate times 40. And we should be able to do that here. Bill is hourly rate times 40, 2350 times 40. Oh wait, that's not what it is. That's the year total. Oh yeah. So wages up to current period is that here. Sorry, I messed up. So this is now accurate. This is 40 times 2350 And then his current rate hourly is 2 weeks. The last pay for this period assume that hourly employees worked a full 2 weeks, 80 hours only. So we have that, and then those two equal the 2820.
Oh, okay.
Then John, we
It's the same
have
situation.
70. Yeah, we have his salary divided by 24. He just barely started, so we have a full half a month wages up to the current period, and then his second portion of the month, and it's the total equals 5,833. And then these are the same as the ones above. Wait, Jane is hourly as well. Jane worked the entire year at 40 hours per week. She had no overtime at any time during the year. So her salary for the year is essentially going to be 82,333, and we can determine that. What would be the easiest way to determine that? This is taking F9. I have to remind myself how I did it. And this, I'm assuming, is well, if it's going to be 80 hours, 40 hours per week, 38 times 280, or sorry, 2080. But then minus this. Circular reference. You know, so minus 30, 40. And this is actually 38 times 80. There we go. So our total is going to be 79,040. Sorry, I probably should have shared my full screen with the details, but the doc says Jane worked the entire year at 40 hours per week. She had no overtime at any time during the year. The company's workers' comp insurance is 0.2. For this pay period, assume that hourly employees worked a full 2 weeks. So we gave her 80 hours at $38 an hour. And then here we took a full year at $38 an hour minus the last 80 hours or the last 2 weeks. And it gives us that. And this should be these two. So this we could have taken 38 times 2080 and then taken out this portion if we wanted to as well. There's another way of calculating it, but it's the same. Does that make sense?
Yeah, now kind of. Now at least I mean, now at least I know I'm the right direction. The
Yes.
numbers is a bit confusing still, but you know, at least I know my calculation wasn't so off as I thought it was. My next question is, let me check. The 401k percentage. With Jane, it says it's 0%. But in the paper, it says that if the employee it's on the company less than a year, it's supposed to be 1% if they are over 21. Why is her 10?
So let me see. So there's a difference between like a required plan. So I'm not sure if you're aware of like exactly what a 401k is, but 401ks are like a savings account where employees can contribute to it, or they can decide not to contribute anything.
Okay.
So my assumption here is Jane is contributing 0% of her paycheck to 401k. So that means the company doesn't have to match it.
Okay, so it means like she decided not to contribute.
Exactly. Yep.
Okay. Another thing that I didn't find, I know that to calculate the federal taxes, we need to look at the other paper with the calculation, but it doesn't say if they are married or single, and it just say if they have checked or not checked. So I kind of got confused on that one too. Which one should I use?
How do I have this information here? Are you saying like it doesn't tell you if they're married or single in the document?
Yeah, on the Word document, it doesn't. I mean, yeah, on the Word document,
Yeah.
it doesn't say much details about the employers. So I just use the one giving on the Excel.
Oh yeah. Yep. Just use what's in the Excel file because it has their marital status and it also gives you that year total too, huh?
Okay.
So it helps you understand that we have this and this and these the amounts. Luckily, I got the same amount that they had just from my calculation, which is good. But these are static. This is what they give you. And same with the marital status. So that's what you'll want to use to calculate the taxes, the federal.
So
And again, this
okay.
this is the wrong number. I put that in my comments. And it should be 2423,
Yeah.
86. And don't be worried about like small differences, few cents here and there.
Okay. Another question is on SUTA. I know that we calculate if it reaches the 33,100, but if it doesn't reach, we do the calculation. If it reaches, what do we do then?
So if it's over 33,000, so for both FUTA and SUTA, the American government said to make it even or equal for everyone, we're not going to have the super rich people pay all the FUTA and SUTA. We're going to make it so everyone pays a portion of their, or the employer pays a portion of their employees' wages for FUTA and SUTA. But if you pay them more than $7,000, then it's zero. So for example, Ron, he gets paid $180,000 a year.
Yeah.
The employer only pays 6% on the first 7,000. Anything after that is zero. So because we're paying him the last 7,500, we're doing $0 on this portion of it. For Mary, same thing, it's $0. For Bill, he hasn't reached the 7,000, so we're taking the current portion times 6%. And then same thing with John, his current portion times 6%. And then 0, 0, because they've already exceeded that 7,000. And same thing with SUTA. Instead of the 6, we use a 3.5. We have 0, 0. We can do the current portion. Oh wait, times 3.5. And 0, 0. And then these other ones are 0 because we've already paid the maximum amount we need to pay for them because they reached that amount earlier in the year.
And
In
with
theory, the employer pays less of this as the year goes on. So it costs more earlier in the year than it does in the later half of the year.
okay. With the Works Corporation, it's always the same, like you just take 0.2% of the salary, doesn't matter the situation?
Sorry, say that again.
The
Each
last
corporation, like any company?
Yes. No, the less taxes that we have to calculate, the workers, something.
Oh, workers' comp?
Yes.
Yeah, so for workers' comp is unique that each individual company has a different rate that is associated with it. So depending on your history as a company, you get a different rate given to you.
Okay, so in this company is this amount and that's it for everybody.
Yes. Yeah, for this entire company, it's that same amount for each individual. So we go here, the current pay amount, and it's $15. That's the same thing all the way down. Formulas. I have this in. This reminds me that 0.2% is this 0.002. But yeah, it's that amount is different on a company basis. And if some employees have a better history, then it could be less. And if some companies have a bad history of injuries and other things, then it could be more.
Oh, okay, got it. Yeah, so I guess that's all my questions.
Okay. Wasn't too many questions. Perfect.
Thank you.
It looks like someone chatted me. It says, how do I know if there is W4 form checked? So it doesn't really give you individual W4 forms. It would simply, and if it would either tell you, like this one says yes, and I'm assuming it says yes because it was blatantly given to you in the spreadsheet, yes. So that shows yes there because that's what the spreadsheet shows you. And that's the only way you can determine because we're not actually having all the W4s in front of us. We're just using the information given to us. So if it doesn't tell us that it's checked, then it's not checked. If it does, then it is. And this is the only one that it has checked on this assignment.
I have a question.
Yeah.
Can I?
Yep.
I wonder because on this payroll, there are 16 labor days that we must to calculate the 16th or only the calculation of 50 days.
So
50.
because of how they run payroll, it's just twice a month. And those salaries are simple. So that's essentially, their full salary divided by 24. And that's what I have on these.
So you don't consider
calculations.
an extra day in this case?
Correct. And even if, like for salary people, it wouldn't matter anyways, because they have a full amount and we could just take it by the pay period. Even if it has an extra day or a less day, you're getting paid for that period. Hourly people, you'll have to take that in consideration. But we were told that Bill worked 40 hours before, and he worked 80 hours for this period. And same with Jane. We were told that she worked 80 hours. So we just have to use the information given to us, because we can't assume that they worked an extra day. Well, we could assume, but we can't assume how many hours they worked unless it's given to us. Because what if they take vacation, or what if they come in sick, or what if they take a half day? What if, you know? So we just need to use the information given to us, which is 80 hours for this period for both hourly employees. And Bill worked 40 hours previously, and John worked, I think it said, started on the 1st. So he just had one pay period previously. And Jane worked 40 hours the entire year, and then had 80 hours at the very end. So we're just trying to take what and this year total was given to us as well, now that I'm thinking about it. So we have to do the 80 minus the year total, which gives us the wages up to current period.
Okay, another question. In the journal
Okay.
entry for the employer portion of payroll, we have a payroll taxes expense. This expense is the difference between the retirement and work compensation expense. It's meant those are calculated adding FICA, FURA, and SURA only.
So it's essentially Social Security, Medicare, FUTA, and SUTA.
Yeah.
All those.
And
Yeah.
we are record in the journal entry now because it's the time when the expense are generated, but we are record as a payable because we are not going to pay now. We are going to wait until finish period. The quarter.
Exactly. Yep.
Okay.
Exactly. That's perfect. So we recognize it because we're accrual-based accounting. We have to
Yeah,
expense
it
it
took me a
out.
lot of time and my head was become crazy, but I tried to figure out how to calculate it.
Yeah, I'm trying
Okay.
to think of a way to like relate it to real life. And maybe it's like, well, you wouldn't really budget. Maybe you do, but your own budget that you use water and services, like you use the water and you use $10 of water a day, but they're not going to pay, they're not going to charge you that daily. They're going to wait at the end of the month and charge it for you, but you should have that money saved, because at the end of the month when they bill you, you have to have that money saved up to pay it. It's the same thing
So,
here.
yeah, I read that we must to have an account, a dependent account to save this money that it's going out from the normal or natural accounts. That we must record the expense and take it from the bank, normal bank account, and send to another special taxes account.
So you don't necessarily have to. A lot of companies just have one bank account, but there's other companies that use this quote unquote envelope method, where they have different bank accounts that hold different monies and amounts to actually pay that, so they don't ever touch it. So it's a good idea, and I've seen a lot of businesses do that, where instead of keeping your this money associated with your operating cash and your operating cash flow, essentially, you put it in another bank account where you don't touch it because you know you have to pay that to the government. So you keep it in that other bank account and then you use that other bank account to pay off all these payables. But it's not necessary, and in our class, we're not going to do that, but it is a good idea. Yeah. And we had another question through the chat. It says, is the modified gross pay always the gross pay minus the 401k? Yes. The modified gross pay is always the gross pay minus the 401k. Sometimes you would also minus healthcare. But we're not dealing with that in this example. I think we may have dealt with it previously with like healthcare as a deduction as well. But in this example, it's just the 401k. And then in a second question, it says, also, which taxes are calculated from the gross pay and which from modified gross pay? I'm confused with that. Okay. So the taxes that are calculated from the modified gross pay should just be the federal taxes and the state income tax. So I said the federal taxes, but it's both the state income tax and the federal taxes. So you have the state income, sorry, my screen's going weird. You have the state income tax is taken from the modified gross pay, and then the federal taxes is taken the modified gross pay as well. And the Social Security and Medicare are taken from the gross, as well as the employer's portion. Social Security and Medicare match this. And then FUTA and SUTA are taken from the gross, and workers' comp is taken from the gross. So essentially, it's just like the spreadsheet shows. Social Security, Medicare is taken from the gross, you minus the 401k, gives you the modified, and then you have the state from the modified, and you have the federal from the modified. And then all of the employer's portion over here is taken from the gross. Bree, or Bres, I think is how you pronounce it. Your question for this is a hint that this down here, the total JE employer portion, the total debits and total credits. So total debits should equal 22,423.86, and the total credits should equal 2,423.86. I'll help you out by giving more hints on this by using my key that I have outlined. So even in my key, I don't have it. It's all rounded and it's a slightly off, but it's not a big deal. Okay, cool. Any other questions? I think that might be all the questions. And I'll take this recording and post it for everyone so you can refer back and kind of watch how I use the numbers or got different numbers. And I also showed you the key briefly. And I think I gave you the employer portion entry, what the number should be at the end. And then you'll have to work through and figure out how those numbers came about and go from there. Okay. Any other questions before I sign off, before I end the call? So I'll take your silence as a no, and then we'll continue on. Thanks for coming, and I guess we'll see y'all next week, unless my wife has plans for me next week, then I'll schedule a different time, but we'll see y'all next week. Thanks. Bye.